All right, sweet. So today we're not going to be going so much over what happened on the market. We're going to be really just diving into something that I see a lot of individuals trade and apply, and is understanding internal and external liquidity. So we're going to define it and put it in words as to what it means on paper, and then we're going to also go over what I personally think and see external and internal liquidity. Okay. So, first, I should say that internal and external liquidity, and I would write this down, this is the meaning of it, is for an expansion level. Let's say on our way to a lower low. Okay. In this expansion level to the downside, on the lower time frames, we had a bunch of previous highs created on the way to that low. All of these previous highs are considered internal liquidity. Okay, so on the expansion way down to a lower low, any previous high is internal liquidity. Okay, external liquidity is a little bit more simple. It's every lower low, below the low of every lower low, and above the highs of every higher high. So this is external liquidity that was never swept. Okay, this is the previous external liquidity level here that we did take, and then we just followed it from there. Okay, but internal liquidity on an expansion level down, it's every previous high. It's every previous high, right? After we start the retracement, every previous high, the moment we start that retracement, every previous high, that one, including the very like very top. Okay, even if we take out that one, okay, all of that is considered internal liquidity. Okay, so vice versa, when you're expanding to the upside and creating a new higher high, okay, every previous low on the way to creating that higher high, all of these lows, that one, all of those are considered internal liquidity. Okay, and so I just want to clarify for everybody, right? So that way we're all on the same page as to what is and isn't qualified as internal liquidity. Okay, so that's what internal liquidity is in the market. And how I personally use it is a little bit different. So how I've been taught to use it or look for is seeking for internal liquidity 50% and below when looking for a bullish expansion. Right, 50% and below would be this low here. That would be our internal liquidity level there. Okay. Okay, so that's what I consider internal liquidity for me. Now, every single one of these, once that external liquidity level here, we'll put it here, so that way, because we're going to turn this into a bearish example as well. External liquidity, and this is being internal. Cool. Okay, so you have internal and external liquidity here. Okay, 50%. Once we sweep that external liquidity, this is the important part. External liquidity has to be taken first. In my eyes, for me to want to seek for internal liquidity. Okay. A very clean example is for anybody that participated in the indices longs today on Was it the New York session on the 20th of December 2022? Yeah. Anybody that took part of that New York session noticed a big internal liquidity sweep before we ran for the highs. So we'll go over that more on the application side. I just want you guys to understand what the concepts are. Okay. So now, of course, looking at this in an inverted, okay, the internal liquidity, once we sweep the external, okay, only once we sweep the external do I personally look for internal liquidity. And the first ones in the range don't really interest me and get my attention as much as the ones 50% or above, because I really want to see more of a mitigation out of this entire push up, right? And so I'm personally looking 50% and above. Therefore, the first one that gets my attention is this one. Okay. And the rule of thumb is the next unmitigated area above your internal liquidity level is your point of interest, or your order block, or whatever you guys want to call it. Right? And so that's the area in which you look for that redistribution.